All right, welcome back to Forex 105 Part 2. Okay, ready to transform your trading skills? Enroll in our 1-year mentorship and training program at www.prekani.com. For those of you who want to get trained properly in the financial trading space. All right, let's get started. And please, if you're just meeting this video now, I think you should go back to the part 1 of this video. That way you'll be able to understand what I have been saying before you continue with us. All right, so now let's talk about leverage in Forex, the power of leverage. One of the reasons why so many people are attracted to trading Forex compared to other financial instruments is that with Forex you can usually get much higher leverage than you would with stocks. Before now, one must have at least a minimum of $100,000 before she can be qualified or he can be qualified to trade the Forex market. But brokers came in as middlemen to mitigate that problem through the power of leverage by allowing us buy some units of the contract size and creating the opportunity to enjoy 10 times their lot using our small deposit. All right, so normally for you to be able to trade with one lot size, one standard lot, you must have a minimum of 100k USD in your trading account. Do you understand? But now brokers are saying, don't worry, we're going to buy this account and then sell to you in portion. So that means with your $1,000, you can still trade with one standard lot size or more. Do you understand? So that means you see some traders trading a $1,000 account and they're using 5 lots. Automatically, what that means is that they are buying 500,000 units of the base currency of the pair that they are trading. Do you understand it now? So brokers came in to say, don't worry, you can even use as much as 10 lot size on your $1,000 account. Did you see that now? Yes, the advantage you get is that when your strategy is well refined and good, you can use this 10 lot size and make $20,000 or $30,000 in a short period of time using this capital. This is why a lot of us run to Forex trading, because of leverage. But now I want to show you the ideal way to use this leverage in such a way that you're not going to blow your account in case the market goes against you. So if you're using a 10 lot or a 5 lot on a $1,000 account, it means that if the market should just go against you by just 10 pips, this whole money is gone. Do you understand? So this is why a lot of traders lose money in the market, because they have watched their favorite Instagram or YouTube trader do these things with lot sizes. They don't even know if those accounts are truly real account or demo account. They will now go and impute that same lot size on their account that they struggled to fund, and then you see them messing around with trading. That is not the right way to trade. The reason why you're coming to trading is for sustainability, is for long term. Do you understand? You're not coming to get rich overnight, because it is not sustainable. It does not work. Even if you make $10,000 today from using big lot size on a small account, there is a high chance you're going to lose the whole of that 10k the next day, because you're not disciplined to understand how lot sizing actually works. All right, so let us talk about lot size. What is leverage all about? Leverage involves borrowing a certain amount of the money needed to invest in something. In the case of Forex, money is usually borrowed from a broker. Forex trading does offer high leverage in the sense that for an initial margin requirement, a trader can build up and control a huge amount of money. According to me, Precious Madabuchi Anyaso, I defined Forex leverage as the advantages enjoyed by traders, which enables them boost their account beyond their initial investment, usually given by a broker to enable them trade for multiple positions. Do you understand? So let's say you're funding your account with a $1,000 account. The brokers is giving you up to 10 lot leverage. Do you understand? They are telling the listener, with your 1,000 you can enjoy our leverage. Don't worry, just yes, they are motivating you to use big lot sizes to make money, no doubt. But the trick is that they know it's not sustainable, because anything that makes you lose a trade that moment, this whole capital is gone because of what? The use of big lot sizes. All right, and somebody will say, Mr. Possible, but don't you think using big lot sizes is going to make us make more profit? All right, but what is the essence of making more profit when it's not sustainable? Isn't that better? Isn't it better that you make profits, you grow your capital in accordance with your risk management? That way you are not panicking. That way you're taking Forex as a profession. You're dealing with it professionally, and maybe at the end of the month you grew your account by 10, 15 or 20%. I know you're going to say, that's too small. How am I going to buy my Lamborghini? You don't need $1,000 to buy your Lamborghini. You need huge amount of money, huge amount of capital to buy your Lamborghini. So for the time being, use your $1,000 or your $100 to master the act of trading. All right, once what you are doing has been successfully repeated over the years, money is going to come naturally. Investors will flow to you. All right, you can even leverage prop firms. They are going to come to fund you naturally because they understand that you can trade professionally. So sustainability simply means that at the end of every month you are making profit either by 5% or by 3% or by 10, 7, 8. As long as you're making some percentage profit, it means that you are growing. All right, so over time you're going to begin to trade good amounts of capital that you can replicate the same thing you've been doing on a $1,000 account on those account size, and you're not under any pressure. Do you understand? So using big lot sizes can put you under pressure. It can even it can even put you in debt. You start becoming indebted to people because of the fact that you're risking money beyond what you're supposed to do professionally. So for me, I always like a professional approach to everything because that is where sustainability is built. So imagine as a trader, you're making in your trading account 15 to 30% every month on your $1,000 account. That means in less than 3 to 4, 5 months, you've successfully doubled this account successfully, and then you continue again. All right, so that is how we are in forex trading to grow money and not to flip money. Your mission here is not to flip money. I'm not attracted to traders who flip money because I've done those things and it's not sustainable. It's very sweet as a trader to get to know that you can turn a $10 account to $100 within a short period of time, but it is also possible that you can still lose it on the next trade. Do you understand? You can still lose everything on the next trade. So what is the need taking those risks when you know it's not sustainable? All right, now it's fine if you have money to spare. Let's say you have $1,000 to spare. Fine, you can put that or fund that amount in your trading account and take any risk you want to take. All right, according to your desires, that's fine. But if you know you are growing, if you know you are coming, all right, as a newbie or as an advanced trader who is just getting it right, please follow the professional way of doing these things. That way you are going to learn better. All right, so I also defined leverage in forex as a trader having one stone. Please identify this word, one stone, which is your initial investment or initial capital, with the intention of killing 10 birds. All right, you want to use that one stone to kill 10 birds. That is your broker's borrowed money, which is the leverage produced by a broker, which if the trader stone is not properly managed, on targeting just one bird, he might lose the entire stone aimlessly. So this is why you see a lot of persons come to forex because a friend told you that I turned $100 or 1,000. Then you feel like that is the standard to approach this market. It's possible, but it's not sustainable. All right. Now, position sizing in forex. Now that we have learned the hard lesson of trading too big, let's get into how to correctly use leverage using proper position sizing. Position sizing is setting the correct number of units to buy or sell a currency pair. It is one of the most crucial skills in a forex trader's skill set. Actually, we will go ahead and say it is the most important skill. Traders are risk managers first and foremost. So before you start trading real money, you should be able to do position size calculations in your sleep. Finding the position size that will keep you within your risk comfort level is relatively easy, and we use the phrase relatively easy loosely here, depending on the currency pair you are trading and your account denomination. All right, now before we can get our math on, we find 5 pieces of information, which is account equity or your account balance, currency pair you're trading, the percentage of account you wish to risk, stop loss in pips, conversion currency pair, exchange rate. All these things is just to make you understand that you need to understand the importance of position sizing and the lot size required for it. All right, now let's talk about the understanding position sizing with pre-canny trading networks. During the course of our training, we have discovered that most of our students, from our own personal research, still find it very challenging with position sizing, especially how it can be professionally used without racking their brains. If you are one of such students, you don't have any problem, as our experts in pre-canny trading network had already solved that problem. Relax, we got you covered, okay? Remember that we still have to enjoy the broker's leverage. That's our advantage as traders, because without the power and understanding of leverage, Forex may not be that interesting. So we have discovered ways in which one can trade Forex and at the same time maintaining the ideal risk and also utilizing the broker's leverage incentive, if only you will discipline yourself to obey these simple instructions. Now let us talk about understanding a trading plan with a $5 account. Now this is how it is. Now let us say that your equity is $500. The right lot size for your trade is 0.05. This is a micro lot. So as your account increase in value, you see that the lot size changes simultaneously. This is how it should be. So when your equity gets to 600, your lot size should be 0.06. When your equity gets to 700, it should be 0.07. When your equity gets to 800, it should be 0.08. When your equity gets to 900, it should be 0.09. Are you seeing how it works now? And when your equity gets to 1000, it should be 0.1. This is how lot sizes should be used. Is that clear? This is how lot sizes should be used. Now let us assume that you are that trader that targets only 5%. That means on any trade you're taking with 0.05, your take profit should be $25. All right, but this is optional because most traders do more than 5%. All right, so this is just how it is. So if you have a daily growth plan of saying that anytime I want to execute a trade, I want to just target 5% of my equity, all right, that's the right lot size for it. And your stop loss is 20 or 30 pips, and your take profit is 50 pips. This is achievable, all right, if you have mastered your skill. Tell yourself, anytime I want to execute a trade, I want to target just this. But I don't want you to fix. This should be flexible, please. The reason is because there are some days you're going to make just 2%. There are some days you make 1%. There are some days you just make 4%, so that you don't go back trying to see that you make 5%. Do you understand? So, but the right ideal lot size for $500 equity is 0.05. The right ideal lot size for $400 equity is 0.04. The right ideal lot size for $300 equity is 0.03. Same thing with $200 equity, 0.02. Same thing with $100 equity, 0.01. I hope this is clear now. All right. So we don't want our students to trade recklessly without a trading plan. So we have discovered ways you can trade and compound your profit to become financially free. It has been discovered that by just risking 2 to 3% of your trading account on every single trade and having a daily target of just 5%, you will multiply your trading account money over the month by 100%, if all things being equal. Now this is if all things being equal, meaning that if you don't lose any trade at all, and which is not possible. Yes. All right, but we have shown you what is achievable. All right, I've shown you what is achievable. Now let us go to the real life situation that traders face. In a situation where you win just 3 out of 5 trades over the month, listen, you just won 3 trades out of 5 over the month, which is very possible. All right, you will grow or multiply your trading account or money by 24% profit. Now let's just assume that you're trading $1,000. That means at the end of the month you've made $240 on that trade as profit. Now if you choose, however, if you decide to take just 2% risk, your profit over the month will be multiplied by 36%. That means $360 on a $100 account, on a $1,000 account. But if it's a $100 account, that is $36. But if it's a $1,000 account, that's $360. So you see, it's a win game. Listen, we say that you just win 3 out of 5 trades. This thing has been proven. And I want you to watch this video again to understand this place I am explaining right now, because this is a challenge with a lot of traders. I don't know where all of you are running to. Somebody in Nigeria, a young man in Nigeria who makes just 36% every month, or let's just say 20 to 36% every month on his trade, can comfortably grow that account, multiply that account, and maintain that account, and live off that account comfortably. If the place you're staying is too expensive, locate the areas that are less expensive and get a good house in that area and still live. You're going to still survive, and as you grow your account, all right, the value of the money you make in dollars increases. Do you understand? And your network also expand, because people want to come and do the same thing you are doing. So even if you win 2 trades, now this is the worst case scenario, out of 5 trade every week, you won just 2 trades out of 5 trade. Let's just assume that you took 5 trades and you lost 3 and you won just 2 trades, and in that 2 trades you just made your 10%, all right, and you're risking 2% on every trade. Now let's say, for instance, okay, you're trading $1,000 account. 2% of $1,000 is $20. That means for every trade you're taking, you're risking $20 on that trade. Do you understand? To make $50 profit. And then at the end of the week, you lost $60. You lost $60. Remember that you lost 2 out of 5 trades. Sorry, you lost 3 out of 5 trades, and those losses are $60. Remember that every trade you're taking, you're risking $20, and then you lost 3 trades. That means you lost $60. And at the end of the week, you won just 2 trades that gave you $100. That means you have profited that week by what? $40. Now, if all this being equal for the rest of the week, that means you have actually made $160 profit at the end of the month. Did you see that? So that was what I was trying to explain to you guys here, and this thing has been tested and proven. Even if you win 2 trades out of 5, and in that trade you're risking just 2% risk on your trading account, your overall profit in the month will grow by 16%. Is Forex trading not beautiful? So I don't know where you guys are running to. Listen, as long as you're starting off from a small capital, you must learn to grow. That is the problem we have here in Africa. The inability to grow according to our strength, according to our experience, and according to our expertise. That is the problem. So we always want to wish we are doing like Mr. A or Mr. B, not knowing that we can do better than Mr. A and Mr. B if we pay attention to our inner strength and allow the discipline for the moment to prevail. Do you understand? So trading is not a do or die affair. It's something that you must be conscious and intentional about, and you must identify what works for you. If this is not achievable for you, this is possible for you. This is achievable for you. Do you understand? This one here is achievable for you. All right, so let's continue. Now let's assume that you're trading $1,000 account. Don't forget, this is the right lot size for it, 0.10. And as your equity increases, this is $1,100. Have you seen it now? 0.11. You see that? $1,200, 0.12. This is the right lot size. With this lot size, it will only take you to lose, for you to be able to blow your trading account, all right, on 3%. That means each trade you're taking, you're risking $30. Let me show you something very, very possible. That means if you're risking $30 on $1,000 account on each trade, how many $30 are you going to lose for you to be able to blow your $1,000 account? That is where the real math comes in now. So that means when you lose 10 trades in a row, automatically you've lost $300. Are you seeing that? You still have $700 to trade. When you lose, for instance, when you lose 20 trades in a row, 20, that means you've lost 600. You still have what? $400 to trade. All right. When you lose 30 trades in a row, that means you've lost 900. You still have $100 to trade. So that means for you to be able to blow a $1,000 account, you must have lost 33 times, which is impossible for a trader who is trained by us. If I train you in this business, and after going through our training and applying all our disciplinary measures when it comes to trading, there is no way you can have 33 loss in a row. It's not possible. But this is worst case scenario. That is the chances you have to blow this account, to blow your $1,000 account, is 33 times. Now, if you're risking just 2% for every trade you're taking, you're risking $20. You're risking $20. That means when you lose 10 trades in a row, you've lost 200. All right. That means you need to lose 50 times. 50 times for you to blow $1,000 account. Are you seeing it now? So there is no way a trader who knows what he is doing, who follows risk management and has mastered his trading strategy, can lose 50 times in a row. It's not possible. So I am not here to print to you that trading is 100% perfect, but I'm showing you that even in worst case scenarios, you still end up profitable. Worst case scenario, you still end up profitable by 16% if you follow the rules. That is to say, every week you have 5 trading opportunities, for instance, and then you're losing 3 just to win 2. Remember that there's some week you win 4 and lose only 1. There's some week you win 3 and lose only 2. There's some week you still lose the 5 times, but all these other wins will cover up for you. So there is no way. There's no way. It's just that greed. You see, greed, the psychology of greed. I'm going to talk about the psychology of greed. In fact, that's going to be like a 1-hour video because there is a lot I need to talk about. All right. So you see that most persons won't want to pay attention to this kind of information because I am not saying things that they want to hear. I am not. No, we are holistic and organic. We're not here to chase clout. We are not here to look for followers. We are here to bring in the real people who are looking for right mentorship, who are looking for a place they can grow in their forex trading career. Those are the people we're looking for to mentor. All right. So somebody may ask, Mr. Possible, how about 10K account? Now let's just assume that you're trading with a 10K account. Look at the right lot size to use. One standard lot size. And as the account increases in value, the lot size changes correlatively. Are you seeing it? Are you seeing that? When your account gets 20K, it becomes 2 standard. If it gets to 30K, 3 standard. 40K, 4 standard. Do you understand? So you can pause this video and watch these lot sizes. See how they are changing according to the account size. You see that? See how they are changing according to the account size. You understand it better. So that any account you're trading, you will know the right lot size to use. It's not going to be something difficult for you to do, except you are greedy. That is when you will not follow the standards. Is that clear? All right. So let's just say that you're trading a 10K account in a country like Nigeria and you're making at least 16% every month. That's like $1,600. You're one of the biggest boys. You're one of the biggest boy in town, because when you know the right places to invest this money. I'm talking about your profit, because your profit has to multiply more money for you, but that's going to be a video for another day. All right. And then you're living according to your means. You are living according to your level. You are living according to your income. You are one of the most successful people on earth, as long as this is sustainable. That is worst case scenario. Even if it's 10%, you're making 1.5 million every month. Do you know what's 10% of 10K account? That is apparently $1,000 every month. 1.5 million. How much is house rent in Nigeria? If you think the place you're living is too expensive, then go and live in your size. This is very simple. Get your size and be comfortable with your size. Do you understand? Yes. If the state where you are is too expensive, maybe house rent there is 5 million, go to other states. As long as you have this skill set as a trader, you will survive in any country you find yourself. As long as you have your phone, your laptop, and the internet, it's just for you to just do the same thing, trading. You get to the state that you can comfortably pay 500K or 1 million as your rent, and guess what? It will still be the same standard of the house people who are staying in that city, all right, are living. You still be living in that same standard of house, but you're paying less. But the question is that you are not earning more than you would if you were in that city. It's all about the money and wisdom. Then over time, when you have grown to a level that you can comfortably make some reasonable amount of trading, you cannot go and live there and live in a bigger mansion. It's as simple as that. Give yourself time to grow. Give yourself time to grow. Is that clear? So same thing with a 100K account. The lot size that is required for a 100K account is 10 lot size. And as the account size increases, you see the lot sizes changes correlatively. All right. So don't forget, I am a student always. Congratulations, you've come to the end of Forex 105. Please ensure that you ask questions in line with the context when necessary, as I am saddled with the responsibility to answer you immediately. Remember never to compare yourself with anyone else's progress. Always keep a winning mind frame and you will do very better in this business. Congratulations once again, and please get ready for our next video. All right, we're taking you one step at a time so that you will understand the things that you need. Hence, trading is concerned. Most Forex mentors will never take you through this process. All right, they will just take you through straight to the chart and start to show you support and resistance. But by the time we get to that point, you know why a support is a support and why a resistance is a resistance, and where you should take a buy and where you should take a sell. But what I'm advising is that you get the right mentorship. Okay, enroll and get yourself trained the right way, okay, so that you can still do these things yourself. Thank you so much and have a beautiful day, week, and month ahead.